Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation desk, and welcome to this morning's market update on Thursday the 6th of August. Following some support finally for prices yesterday afternoon, we've seen them open a little bit higher again today. Key drivers are likely to be number one, again the gas system is oversupplied but only by 5 MCM today compared to previous days. Number two, we've got oil prices actually dipping back below $50 per barrel as profit taking quickly erodes any of the gains seen yesterday from the US inventory withdrawals. And finally, number three, the pound sterling again remains well supported ahead of the Bank of England interest rate decision today. Those are your main headlines. If you've got any questions, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at the UK gas system to start with, as I said, line pack forecasts at the moment are around 5 MCM long. This comes as demand has picked up to about 167 MCM. That's kind of 17 MCM above the seasonal normal levels that we've been seeing through the start of the week. We've also got increased demand from CCGT power generation sites as the wind feed-in today is dropping off, currently only generating around 1.5 gigawatts. And that could actually drop off further towards under half a gigawatt by tomorrow. Looking at the IUK exports, they've picked up a little bit, over 32 MCM today, so that's increasing the demand in the UK. There's also been a drop-off in Langled flows into the UK. This comes ahead of the Troll maintenance forecast for tomorrow, which will actually take those flows right down to zero. So there's a bit of speculative bullishness there ahead of that short gas system potentially tomorrow. Looking at the power side of things, peak margins are forecast for this evening around 10 gigawatts. That's reasonably comfortable and in line with previous days. We have now got CCGT contributing nearly the same amount as coal and nuclear generation combined. And also peak margins over in France are actually a bit tighter this morning, under 5 gigawatts, so imports through the French interconnector are only at 50% of capacity, around a gigawatt at the moment. As I said, oil prices have slumped back below $50 per barrel. This came mostly yesterday afternoon, actually, after the US inventory data was released. There was about $1 worth of speculative bullishness built into those prices ahead of the data release, but that was quickly eroded as the outturn was only 4.4 million barrel withdrawal, although bigger than forecast, not enough to sustain that support for prices. Brent benchmark contracts are now trading at 49.50 today, continuing to be pressured by that global oversupply. Next direction may well come tomorrow from the US jobs data, which will have an impact on the US dollar and an inverse impact on dollar denominated commodities like oil. Finally, a quick look at the pound-euros pairing. Pound's still worth 1.43 euros, so reasonably well supported near the highs for that market. This comes as there's a bit of speculation that the Bank of England will be raising interest rates in the UK before the end of the year. There's an interest rate decision for this month today, although largely expected the rates will remain the same. There is some expectation that when the minutes are released, it will show that at least 2 of the 9 voters are now pushing for a rate rise. We've also got Mark Carney, the Governor of England, speaking after those minutes are released, with any FX traders listening closely for any further clues as to when a rate rise might materialise. That's it for today. As always, if you've got any questions, please give us a shout. Cheers.